In this video, we review eToro versus Webull. Have you used eToro or Webull before? What was your experience? Leave your eToro or Webull review in the comments section below. Did you know that eToro's social trading feature allows users to replicate the strategies of top investors, making it a pioneer in copy trading? Additionally, Webull has rapidly gained popularity among younger investors due to its commission-free trades and advanced analytical tools. eToro, established in 2007, is renowned for its user-friendly interface and social trading capabilities. It offers a diverse range of assets, including stocks, ETFs, cryptocurrencies, and commodities. The platform's copy trader feature enables users to mirror the trades of successful investors, which is particularly beneficial for beginners seeking guidance. However, eToro has faced regulatory challenges in certain countries. For instance, in May 2020, the Securities Commission Malaysia stated that eToro was operating without proper licensing in the country. Similarly, in 2018, eToro agreed to pay fines in Canada for operating without a license. These incidents highlight the importance of users ensuring that the platform is authorized to operate in their respective regions. Webull, launched in 2017, caters to self-directed investors with its comprehensive suite of analytical tools and real-time market data. It supports trading in stocks, options, ETFs, and a selection of cryptocurrencies. The platform's advanced charting tools and technical indicators appeal to experienced traders seeking in-depth market analysis. However, Webull has faced scrutiny over its ties to Chinese companies. In 2024, attorneys general from 14 U.S. states launched a probe into Webull centered on data privacy concerns and its potential ties to the Chinese Communist Party. Additionally, in June 2024, the state of Tennessee banned Webull on all government-issued devices. These concerns may influence users' decisions, especially those prioritizing data security and geopolitical considerations. Both platforms offer commission-free trading, making them cost-effective choices for investors. eToro charges spread fees and imposes a $5 withdrawal fee, along with inactivity fees after 12 months of non-use. Webull does not charge commissions on trades and generally has lower fees, though certain services like wire transfers may incur charges. In terms of educational resources, eToro provides the eToro Academy, featuring tutorials, articles, and webinars to assist users in understanding market dynamics. Webull offers the Webull Learn Center, which includes articles and tutorials on various trading topics, as well as real-time market data and analysis tools to support informed decision-making. When considering customer support, eToro offers assistance through its help center, live chat, and email, though response times can vary. Webull provides a comprehensive help center and live chat support, with generally positive feedback regarding responsiveness. In conclusion, eToro is well-suited for beginners and those interested in social trading, offering a user-friendly interface and a wide range of assets. However, potential users should be aware of its regulatory challenges in certain regions. Webull appeals to more experienced traders seeking advanced analytical tools and a customizable platform, though concerns about its ownership and data privacy may be a consideration. Investors should carefully evaluate their individual needs, regional regulations, and security concerns when choosing between these platforms.